Hi guys. Today we will analyze Charter Communications stock, and calculate its intrinsic value using two different valuation models. Enjoy! Hit the like button and subscribe to my channel if you want to see more videos like this. Technical analysis. The stock is a bad performer in the overall market. The short-term trend is negative. The long-term trend is negative. There should be more interesting stocks out there. Strong support level is around $418. Next support levels are around $375 and $348. Strong resistance level is around $479. Next strong resistance levels are around $545 and $575. In the last month the stock has been trading between $410 and $503 range, which is wide. It is currently trading in the middle of this range. It may be a good idea to wait for a pullback before considering an entry. The stock has an average volume of 1.7 million. This is a good sign as it is always nice to have a liquid stock. The stock has been in a downward trend since September 2021. Be careful. Intrinsic value. Buy low, sell high. We have heard it many times before. But how to know when it's low, and when it's high? The intrinsic value of a stock is its true value. It refers to what a stock is actually worth, even if some investors think it's worth a lot more than that amount. Intrinsic value is important, because it can help investors understand whether the cost of a stock is undervalued, or overvalued compared to the market value of the stock. Let's calculate the stock's intrinsic value. For more accurate results, we will use two different valuation models to calculate the intrinsic value of the stock. Discounted free cash flow model, using the formula below, then, valuation based on earnings per share, 5-year average P/E ratio and expected growth rate. First model. Discounted free cash flow valuation. This spreadsheet contains some financial data that we will use for the stock valuation. We see that the average revenue growth rate of the stock has been around 13% per year, for last 5 years. We see that the average profit margin of the stock has been around 9% per year, for last 5 years. Also we see that the average free cash flow to net income rate of the stock has been around 186% per year, for last 5 years. And we expect 8% per year average stock market return. Now, let's consider 3 different scenarios for Charter Communications Company: bad, average, and good. First scenario. Charter Communications will have bad performance in next 5 years, and we will use the following parameters in our calculation. Future revenue growth rate would be low, 4%. Future profit margin would be low, 6%. Future free cash flow to net income rate would be low, 80%. In this case, the fair value of the stock today would be $323. Second scenario. Charter Communications will have average performance in next 5 years, and we will use the following parameters in our calculation. Future revenue growth rate would be average, 5%. Future profit margin would be average, 7%. Future free cash flow to net income rate would be average, 85%. In this case, the fair value of the stock today would be $404. Third scenario. Charter Communications will have high performance in next 5 years, and we will use the following parameters in our calculation. Future revenue growth rate would be high, 6%. Future profit margin would be high, 8%. Future free cash flow to net income rate would be high, 90%. In this case, the fair value of the stock today would be $498. Second model. Valuation based on earnings per share. This spreadsheet contains another financial data that we will use for the stock valuation. The current earning per share price for the company is 27.61. Minimum rate of return. I will use 10%. Because when we invest in individual stocks, we are looking for a higher return than the S&P 500. For Charter Communications, analysts forecast growth rate around 6% per year in next 5 years, and future P/E around 15. Again, I will use 3 different scenarios for Charter Communications Company: bad, average, and good. First scenario. Charter Communications will have bad performance in next 5 years, and we will use the following parameters in our calculation. Future growth rate would be low, 4%. Future P/E would be low, 15. In this case, the fair value of the stock today would be $250. Second scenario. Charter Communications will have average performance in next 5 years, and we will use the following parameters in our calculation. Future growth rate would be average, 5%. Future PE would be average, 17. In this case, the fair value of the stock today would be $309. Third scenario. Charter Communications will have high performance in next 5 years, and we will use the following parameters in our calculation. Future growth rate would be high, 6%. Future PE would be high, 19. In this case, the fair value of the stock today would be $376. As you can see, today the stock is overvalued, $473, even if we expect the company's high performance in future. While the company has a good profitability rating, it has a high debt level. Also, the company is expected to show a small growth in the next 5 years. Based on that, the stock looks overpriced at the moment. Keep in mind that the stock has been in a downward trend since September 2021, and the stock can go lower before it recovers. I may consider buying the stock when the stock drops below $380, and when it shows signs of reversal. Company's strengths. Charter Communications is an American telecommunications and mass media company with services branded as Spectrum. It's the second largest cable operator in the U.S. by subscribers, just behind Comcast, and third largest pay TV operator, behind Comcast and AT&T. Charter is the fifth largest telephone provider based on number of residential lines. Charter Communications continues to post solid operating performance, partially offset by competitive overlaps. An elevated, but manageable debt stack also bodes well in an inflationary environment. Charter is looking to significantly expand its service footprint in rural areas, with the help of federal rural development funds. Charter has the scale to efficiently adapt to changes hitting the telecom industry. The firm will be a force in the wireless industry eventually. The company has a return on equity of 42% and profit margin of 10%. This is amongst the best returns in the industry. The company has a return on assets of 3.5%. This is comparable to the industry average of 3.8%. Charter also has a robust share repurchase program. Risks. Like other cable companies, Charter is losing video subscribers, but gaining high-speed internet and wireless subscribers. The practice of cord cutting may accelerate as more consumers begin to see over-the-top as a viable alternative to cable video rather than as a complement. This would compound the negative impact of subscriber losses on Charter, even as it sells more broadband subscriptions. The company faces threats from over-the-top video services Netflix, Hulu, Amazon Prime and others. Charter also faces intense competition in the cable industry, including satellite broadcasters DirecTV and Dish. Resurgent telecoms AT&T, Verizon, and T-Mobile are also ramping up comparable service offerings. Programming is Charter's largest expense, and competition to license must-have content may require the company to pay ever higher prices for that content. Particularly critical is sports programming. The cable industry is highly regulated, with the FCC ruling on critical issues, like net neutrality, set-top box policy, and internet privacy among others. States and local municipalities also regulate cable franchises. Charter has a reputation for poor customer service. Charter has large debt obligations, which could limit investment in other business opportunities, and potential acquisitions. The company must refinance billions of dollars of debt each year. The company is expected to show a small growth in revenue. In the coming 5 years, the revenue will grow by 5 to 7% yearly. Based on estimates for the next 5 years, the company will show a medium growth in earnings per share. The EPS will grow by 8 to 12% on average per year. Thank you for watching. If you found this video helpful, please hit the like button and subscribe to my channel.